Wall Street watchers have been transfixed this week by the small investors who've used social media to bring short-selling hedge funds to their knees, most notably buying shares of GameStop. In South Korea, though, short-selling is not allowed, so this is not something likely to happen here. Kim Sung-min reports.
Connected through social media, once weak retail investors have turned into an army able to influence the stock market and even crash a billion-dollar hedge fund. At-home retail investors in the U.S. banded together in the WallStreet Bets Reddit chat room and bought shares of struggling video game chain GameStop. They pushed shares higher after noticing that short-selling hedge funds had bet too much on the company's stock price falling. The small investors pushed GameStop's share price up so much that the company's value increased from $2 billion to over $24 billion in just a few days. That was until brokers like Robinhood restricted trading on the stock, citing market volatility, which caused GameStop to close down more than 40% on Thursday.
You can't buy the stock anymore. You can only sell it, and they're trying to make people scared so that they can cover their shorts. And we're out here protesting that because that's bull.
The trading restrictions didn't just lead to online fury, as the U.S. House Financial Services and Senate Banking Committees said on Thursday local time that they will hold hearings over apps such as Robinhood suspending trading of GameStop. The U.S. isn't the only country to see a new generation of small retail investors with increasing power in the market. South Korean retail investors are also gathering in online public chat rooms on social media platforms like KakaoTalk and taking group action. But local stock trading laws mean we're unlikely to see an incident in South Korea similar to GameStop.
Retail investors in South Korea could be easily swayed by KakaoTalk online boards, but what's different from GameStop is that short stock selling is restricted, so taking revenge on institutions or hedge funds cannot happen.
Short selling, the act of selling stocks that you don't yet own, then buying them at a later date when you hope they have fallen in price, is currently banned in South Korea. The government prohibited short selling to lower market volatility, but some institutional investors want the ban overturned, and the government is looking into allowing short selling perhaps as early as June. Meanwhile, on Friday, South Korea's benchmark Kospi closed below the 3,000 mark for the first time in 16 days as the foreign investors sold off stocks in bulk. The Kospi was down 3.3% to close at 2,976. Kim Sung-min, Arirang News.